Good morning, this is Robin Bieber on ChartTalk on the 8th of June at 7:05 in the morning London time, and the chart in front of us is RBOB first line continuation. More of that in a minute. The highlights towards the end of last week and specifically on Friday were that targets higher were hit and activated. There are currently targets above the market, which the contracts look like hitting and indeed are hitting at time of writing. The 5-day moving averages held perfectly on virtually every contract on Friday, and that is the hallmark definition of an uptrend. It's the 5-day gap now, because of the surge in prices on Friday, is quite wide, and this is as high as over $2 on Brent. It's $2.73 on heat and $2.99 on RBOB. In other words, when the 5-day gaps get too wide, there is the danger of a dip. But that dip is more unlikely to take us anything like south of the 5-day moving averages, which are some way away. It's more likely just to narrow the gap, or indeed for the market to cool down a bit. But the fact of the matter is there's momentum higher. And the 5-day moving averages are unlikely to be tested today unless there's some form of calamity. Now, the reason I put first line continuation RBOB up here is this level here, 123.48. If we move and close over this level, and we're just below it at the moment, even though we breached it, if we move and close over this level, and it was a target for RBOB from Friday's performance, is that we then move into the gap zones. These are the gaps that were left over that weekend, 6-9 March earlier this year, the catastrophic move south. Now, gaps get filled, and the move and close over 123.48 would probably provide the trigger to take the contracts generally higher and into the gap zone. And the gap zone in RBOB's case, once it's over 123.48, leads it higher, ultimately to 138.90. But we then have to go to the contract, where the gap is slightly closer at 136.42. It also gives us some significant resistance at 130.72. Nevertheless, RBOB has targets higher. It's hit its target to 123.48. It would now acquire another target to 124.50, which has come to within 6 points of. So a move and close over 124.50 would have this contract running up higher into and towards the gaps, starting at 130.72. So, excuse me, watch the 123.48 level like a hawk. A move and close over there gives it some significant upside. And it would green light contracts like WTI into the gap zone. Now, over 40.11 on WTI, that was its initial target. That's been hit overnight. A move and close over here gives us a target to the first gap at 41.05, then 41.88. 41.05 is the continuation gap, easily identified here. 41.05. There's that dreadful weekend that occurred, or the overnight move for the weekend. 41.05 and then 41.89. The gap zone for TI is 41.05, 41.88, and it is a very, very dangerous level. And I would expect it to be headed towards ultimately 41 and 41.88, and it is a significant price cycle completion zone. Brent has moving up to 43.87. It hasn't quite hit that yet. That's its target higher. And if it closes over there, I would be looking for a move to 45.18, the continuation gap. 45.18, the continuation gap. The gap zone is 45.18, 45.98, and that's where maximum care is required. Heating oil has hit its target to 116.81. Rallied over, it has now hit its come to within a whisker of its next target at 118.84. A move and close over 118.84 would give us a target to 120.79, the 100-day moving average. In other words, there's further upside developing. Gas oil has hit its target to 336.50, and a move and close over here gives it a target to 351.50, then 356.75. The contracts are now running up into what we call the gap zone. This is a dangerous area. the trigger for the move into the gap zone is RBOB over 123.48. It's going to ebb and flow around there. The 5-day gaps are too wide, so don't be surprised by some pretty frisky dip action, but the dips are likely to be absorbed by support. But the 5-day moving average, which is the most important support, is some way below. So that gap could get narrowed today. The bulls are in control of the market, and I expect it to head higher. Now, if we just look at a tiny bit of structure, deck red deck. Whilst it's over 176, there's nothing stopping it getting it to minus 46. It's breaking out north. Debt reg deck on Brent. Target to minus 232, the first correction point. It should make its way there. A move and close over 232 would have it up to minus 96, the 50% correction point. If we look at the 60-minute charts, not surprisingly, they're suggesting a dip. This is August Brent 60-minute. I would expect a dip and a dip to occur during the course of the London morning. It might be short-lived, but it's a little bit toppy, and with RBOB hanging around the 123.48 area, just be a little bit careful. RBOB 60-minute chart, telling us the same thing. Expect dips into the early part of the London morning, then wait and see. Use the RBOB's 123.48 as a critical pivot. If it's over there late afternoon, the odds are that we're in for higher numbers and up and into the gap zone. That's all for today, folks. Good luck, good trading, and bon appetit.